Now we move on to bonds. Bonds are debt instruments issued by governments, corporations, and other entities in order to finance big activities or like finance projects. The face value of the bond is basically the loan that is given by the finance corporation. That would determine the amount of face value. Once the money is loaned to the finance corporation or the government, the investor then receives interest for the money that he lent to that particular entity. That interest in terms of bonds is also known as the coupon. One last thing that you do need to understand about bonds is the maturity date. This maturity date is when the bond expires and the investor receives his capital back. Now let's look at a case study of these bond instruments. In this case study here, let's put an example of a face value of a bond being $1,000. And the coupon rate, which is the interest rate, let's put it at 10%, and the maturity date, let it be 10 years. So let's take it step by step. So for example, if the investor has bought the bond, that means he has given $1,000 to the corporation or to the government, just issued the bond. Now let's calculate the interest that the investor will now receive. Now the investor will receive at a 10% rate for 10 years. So 10% of 1,000, that would be $100, and $100 each for 10 years would be times 10, that will give you a total of $1,000 interest, which the investor will get for buying the bond at $1,000. Now at the end of the maturity date, which is at 10 years, the investor will get his capital back, which was $1,000, which he used to buy the bond, plus the interest, which is 1,000 as we calculated here. Therefore, he will get altogether $2,000. So for a $1,000 investment, he's got back $2,000 at the end of 10 years. Okay, bonds are naturally known to be safe, but however, do understand that the more the interest rates, the riskier the bond is. So as traders, we always cover our risk first. That's the first thing we always predefine, and cover our downside, because the upside will always look after itself. More of risk management in the later on modules. But for now, I believe that this case study gives you a very good understanding of the different terminologies we used and how it actually applies to a bond example. We trust you enjoyed our Traders Education Center tech video. To unlock the full tech modules for free, click on the link below and hit the subscribe button. Then go ahead to register with your contact details and create your unique username and password to enjoy the fully unlocked tech modules.